To CNN, the Trump administration is going to impose a $100,000 fee on H-1B visas. Kristen Holmes is at the White House for us. Kristen, what can you tell us about this?
What exactly has transpired in the last 24 hours? US President Donald Trump, he has signed a proclamation that will require a new annual $100,000 fee for H-1B visa applications.
We need workers, we need great workers, and this pretty much ensures that that's what's going to happen. I think, Sean, do you agree with that?
Well, they're $100,000 per year. So the whole idea is no more will these big tech companies or other big companies train foreign workers.
I think we're going to be very happy. Everyone's going to be happy. And we're going to be able to keep people in our country that...
In Washington, a policy shock has shaken the foundation of America's economy and corporate landscape. President Trump's decision to impose a $100,000 surcharge on foreign executive visas sent shockwaves through the halls of power in Silicon Valley, Wall Street, and Detroit. This wasn't just another immigration tweak. It was a bold move with billions of dollars on the line. A clear signal that the United States is closing its doors to international talent on terms it once thrived upon. The reaction was immediate. Multinational corporations depend on global expertise to fuel innovation, from engineers in India and South Korea to supply chain specialists in Germany and robotics experts from Japan. For every skilled worker brought into the United States, companies must now weigh a six-figure liability. That means higher costs for corporations, slower progress for technology, and less competitiveness on the global stage. The U.S. Chamber of Commerce described the decision as a direct strike against American competitiveness. Goldman Sachs analysts estimated the surcharge could burden U.S. businesses with an additional $15 to $20 billion in costs by the end of 2025. Beyond numbers, the symbolic message to the world was clear. The U.S. is no longer the land of open opportunity it once was. But if the visa announcement rattled boardrooms, the federal raid on Hyundai escalated the storm into a full-blown crisis. Agents entered Hyundai's facilities in Alabama and California, seizing records and investigating allegations ranging from labor violations to tariff evasions. This wasn't just a routine inquiry, it was a public spectacle with global consequences. Hyundai, which has poured over $10 billion into electric vehicle production in the U.S., suddenly found itself portrayed not as a partner in America's economic future, but as a suspect in Washington's trade war theater. In Seoul, the reaction was sharp. South Korea's trade ministry issued a strong warning that the raid undermines trust between the two allies. Inside corporate boardrooms, Hyundai executives began reconsidering the scale of their American investments. Quiet talks began in Ontario, Canada, exploring the possibility of shifting expansion plans north of the border. And in Canada, the timing couldn't have been better. Ottawa seized the opportunity, rolling out targeted incentives, fast-tracked visas for executives, green energy subsidies for battery production, and lower tax rates on research and development. Toronto and Vancouver quickly became magnets for executives searching for stability. Bloomberg reported that within weeks of the U.S. crackdown, foreign direct investment applications in Canada surged by 27%. Canada had positioned itself not just as a neighbor, but as the safer North American hub for multinational investors. The contrast could not be sharper. On one side, the United States, tightening its grip with tariffs, surcharges, and raids. On the other, Canada, opening its arms with predictable policies, stable governance, and a welcoming approach to global capital. The irony is striking. Policies designed to protect American workers are now exporting American jobs and investment across the border. Globally, the fallout is cascading. European officials warn that Washington's new visa rules may breach trade agreements. India sees opportunity, marketing itself as the new hub for displaced American corporations, while China quietly benefits, painting U.S. nationalism as proof that Washington is pushing allies away. Investors are left with a stark choice: gamble on an unpredictable America or pivot toward Canada, Europe, and Asia, where the rules feel steadier. For ordinary Americans, this isn't a distant policy debate. It's about jobs, prices, and the country's competitive edge. With fewer international engineers and innovators, U.S. technology risks falling behind. Raids on foreign companies mean disrupted supply chains, leading to higher costs at the checkout line. And with investment capital fleeing north to Canada, the very manufacturing jobs the policies were meant to protect could vanish. Economists warn that what was intended as a protectionist strategy is backfiring, undermining America's long-term leadership in key industries. Trump's defenders argue the visa surcharge protects domestic workers and ensures that corporations don't undercut American talent with foreign hires. But critics say the policy ignores the realities of a globalized workforce. The world's leading innovations are born from collaboration across borders, not walls between them. The raid on Hyundai, they argue, risks alienating allies who have long been partners in America's economic success. Canada, meanwhile, isn't just passively benefiting. It is actively shaping its image as the better alternative. Prime Minister Mark Carney has emphasized stability, partnership, and openness as Canada's greatest assets in a world where economic uncertainty grows by the day. The Canadian government is betting that multinational firms disillusioned with U.S. unpredictability will find a permanent home north of the border. And early signs suggest they're right. The question is not simply whether the United States can weather the backlash of Trump's $100,000 visa move and Hyundai raid. The real question is whether America is surrendering its competitive edge, piece by piece, to neighbors who are quietly positioning themselves as the new centers of global investment. The question is not simply whether the United States can weather the backlash of Trump's $100,000 visa move and Hyundai raid. The real question is whether America is surrendering its competitive edge, piece by piece, to neighbors who are quietly positioning themselves as the new centers of global investment. For decades, Washington dictated the pace of global commerce. It was the U.S. that set the rules of trade, opened its markets to new ideas, and benefited from the world's brightest minds. But now, policies framed as protectionist shields are beginning to function more like barriers that push talent and capital away. In an interconnected economy, those barriers rarely stand still. They redirect flows of people, money, and opportunity. And increasingly, those flows are bypassing the United States and finding welcome across the northern border in Canada. Canada is not merely reacting to American missteps, it is actively reshaping its pitch to investors. Immigration pathways have been simplified for skilled professionals. Government-backed funds are channeling billions into clean technology, artificial intelligence, and advanced manufacturing. Universities are offering partnerships to companies that want access to research talent without restrictive visa bottlenecks. In this environment, Canada appears not only open for business but also stable, a word that investors value above all else. Contrast this with the uncertainty in the United States. From the sudden imposition of six-figure visa surcharges to headline-grabbing raids on trusted corporations, the narrative is one of unpredictability. For every foreign CEO watching from Seoul, Tokyo, or Berlin, the message is unsettling. If a company as large as Hyundai can face this kind of exposure, no firm is beyond reach. And once confidence erodes, it is notoriously difficult to restore. The symbolism cannot be ignored. The Hyundai raid echoed far beyond legal proceedings. It became a case study in the fragility of America's business climate under protectionist policies. When combined with immigration restrictions that push global talent elsewhere, it forms a dual pressure. Both capital and brains find better homes abroad. And as history has shown, when ecosystems of innovation relocate, they rarely return. Canadian officials, meanwhile, are seizing the narrative. They present themselves as guardians of transparency and fairness, contrasting their policies with the turbulence of Washington. When multinational executives weigh the risk of entering or expanding in North America, Ottawa's calm assurances are now competing directly with America's market size. And for an increasing number of them, reliability outweighs scale. This is why the stakes extend beyond dollars and contracts. They touch the very foundation of American influence. For generations, the U.S. exported not only goods but also an idea. That opportunity was limitless, and anyone could thrive within its borders. By raising entry costs to $100,000 for visas, that idea begins to crumble. By raiding a global corporate giant, that promise of fairness looks shaky. And by contrast, Canada, once seen as a quieter secondary option, begins to look like the safer bet. The long-term risk is clear. If corporations and talent continue to choose alternative markets, the United States may lose more than short-term investment. It may lose the central role it has played in writing the story of globalization. And in that vacuum, Others, Canada, Europe, or even China, will step forward to define the rules. And so the choice remains urgent. America can double down on isolation and risk accelerating its decline in global investor confidence. Or it can recalibrate, recognizing that openness and trust have always been its greatest competitive advantages. The lesson of this moment is not just about Trump's policies, or even about a single raid on Hyundai. It is about direction. Every nation must decide whether to close itself off in the name of short-term protection or to open itself up for long-term prosperity. The United States, through a series of policy decisions, appears to be testing the first path. Canada, by contrast, is choosing the second. In the coming years, the results will become visible in ways that no speech can obscure. They will show up in where new factories are built, where new technologies are developed, where the brightest students choose to study, and where investors decide to place their capital. If these trends continue, Toronto, Vancouver, and Montreal may rise as names synonymous with innovation and opportunity, while traditional American hubs struggle to maintain their magnetism. If you found this analysis valuable, support the channel by subscribing to Traveling Vibes. Your engagement helps us continue producing in-depth documentaries on the decisions shaping our world. Click like to help spread this story, share it with friends who care about the future of global trade, and add your voice in the comments below. Do you believe the United States can reverse course and reclaim investor faith? Or is Canada destined to become the new hub of North American opportunity? The story is far from over, and the next chapters will be written by policy, by leadership, and by the choices nations make in an increasingly uncertain world.